It has been hard the past 2 weeks in the stock market since it has been a complete downturn, and even more for growth stocks. Pre-market hours, the S&P 500, the Dow Jones and the Nasdaq futures were down as well, but right after the market opened, the S&P and the Dow Jones turned green, but the Nasdaq stayed on the red. Plus, we can see that the US 10-year Treasury bond keeps rising and it is now at 1.6%. The question is, what is Cathie Woods and ARK Invest doing right now, and what do they think about all this? Are we in a bubble that is about to explode? Is it time to panic or just time to buy? Hello everyone, Adriana here with a brand new video. Today I will most likely talk about the most recent Cathie Woods video, which I do recommend you watch right now. I will talk about the most important things I saw in that video. I will also talk a little bit about stocks that they're currently buying in this downturn. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out with the algorithm. And also have a completely free Discord group chat, which is for that is down in the description below. Now, according to Cathie Woods, this past week have brought a lot of opportunities for growth investors, and she is excited about that. She does knows that there is a lot of fear, uncertainty and doubt about all this, but explained that ARK Invest look for companies that have a rate of return of about 15% compound annual rate for 5 years, and she explains that because of this downturn, that return will most likely increase as they are holding and buying more and more of their higher conviction stocks. ARK Invest is expecting more volatility to happen, which they like since they use volatility in their favor, since it is excellent for a bull market for growth stock. Obviously not that good for a bear market as we saw this past weeks, but ARK still takes advantage of it. How? Well, by investing in disruptive, innovative companies with exponential growth potential. Those are the type of stocks they are currently buying and are recommending us retail investors to invest in. For example, she talks about the EV market. They're expecting the electronic vehicle unit sales, including China, to compound at a whopping 82% annualized rate for the next 5 years. That is incredibly high, and it impressed me that those are their expectations, since it means that the EV market still has way more room to expand, and I think it is completely true, since as they said, the automobile industry has peaked already and that the future is ride-sharing companies, EVs and autonomous driving. She also talked about something very interesting, and this is the difference between institutions versus ARK Invest and retail investors when investing. According to them, institutions are not set up correctly right now to analyze disruptive companies like Tesla for different reasons. The first one is because after the dot-com bubble, institutions developed a lot of risk aversion and volatility became a bad word. Second, because institutions tend to be benchmark sensitive, which means that they tend to invest in companies with benchmark or that are included in indexes. And that is why they did not invest in Tesla before, because Tesla did not enter the benchmark until last year when they got to $500 million in market cap and after Tesla joined indexes. But she still thinks that institutions are not trusting Tesla that much because of the third reason on why institutions are not set up to analyze disruptive companies. And the third reason is that analysts are specialized in industries, sub-industries or sub-industries, since that is how the market have performed over the past years, but they have not taken into consideration that disruptive companies should be analyzed from different point of views. For example, Cathie Woods talks about autonomous vehicles and how that involves 3 different platforms. First would be robotics, because nothing more than autonomous vehicles are robots. The second platform would be energy storage with their battery pack system, and the last one would be that they are powered with artificial intelligence. That is why they own Tesla in 3 of their different ETF, which are ARK Innovation ETF, Autonomous Technology and Robotics ETF, and the Next Generation Internet ETF. While institutions did not expect electric vehicles were going to get this big this fast, and that it would dominate too much of the market that fast as well. Same with retail. Cathie Woods says that online retail right now accounts for 20% of total retail, and she does think that that will grow even more since people are more comfortable right now buying online because of the pandemic and will not go back in time after the pandemic. That is why ARK Invest is currently investing in stocks like Shopify or Square, because they benefit out of this. Yes, we have been hearing a lot that a crash would come because we are in a bubble. Every single year we hear the same thing, and according to Cathie Woods, we are not in a bubble.
We are not in a bubble. Although compliance would have me say, I do not believe we are in a bubble. rightly, is because the seeds of what we believe will happen during the next 5 years, so these 5 innovation platforms involving 14 technologies, the seeds for all of them were planted more than 20 years ago in the tech and telecom bubble, and even before that, so the PC and the internet together. And then the internet, of course, the bubble, caused a rush of capital into they were actually the dream at the time. The dream was right. It was just 20 to 25 years too early.
She explains that people or institutions talk about tech companies or disruptive companies should be in a bubble because their prices are so high and valuations are really rich. But she thinks that now is the time to invest in technology, and in my opinion, she is right. Any company that is not innovating and not investing in technology will stay behind and most likely become obsolete. Then she talks about the Fed, interest rates, and what is going on with inflation and the government spending, which is very important to understand and analyze when investing because that directly affects companies. She explains that interest rates on the 10-year bond going from 1 to 1.5 and today 1.6% is like and I quote, a tsunami to the bond market because that is a 50% increase in yield in the bond world. And what that does is investors start looking at bonds or investing in bonds, but start selling stocks to be able to move to the bond market, which is what has always happened. But she explains that interest rates going up is nothing more than real growth starting to pick up, even with an inflation component. And the government spending is nothing more than future taxation, but that should not surprise the market since it has been around for over a year now. Then on the employment report, she explains that even though employment numbers were better than expected, the average work week dropped 0.3 hours to 34.6 hours per week, which impacts incomes directly. Now, in the past week, they have been buying and buying tons of stocks. They have been buying Zoom, PayPal, Teladoc, a lot of Teladoc, more Zoom, Palantir, a lot of Palantir as well, and we will talk about that later in the video, why they have been investing in Palantir. They have been buying more and more Tesla stock as it now represents less than 10% of their portfolio, which means that when it goes up, they will most likely sell just because they rebalance their portfolio and will like to keep positions below 10%. They have bought more of Shopify and Square, as I said, Roku, and more stocks. Now, I'm sure you have already seen a lot of bullishness around Palantir lately, and that Cathie Woods is massively investing in them. They started buying Palantir very cheap and have been slowly increasing their position, and that is no secret. I have covered that before in my Palantir videos. What impressed people is that we all know Palantir is currently high and has a rich valuation of around $40 to $44 billion, which obviously does not make sense, but ARK Invest is mainly focusing on the future of the company, the potential exponential growth that they have, and they are practically expecting that Palantir business to explode in the coming years. I think that is why she does not care what happens to the S&P 500 in the short term and if they beat it or not on a yearly basis, as growth stocks are very volatile. On the other hand, ARK Invest do expect that in 10 to 20 years, they will look back and see that they have done way better than indexes by investing in growth stocks. My opinion about this is simple and has not changed from the past. I know that disruptive companies in the short term are difficult to see because they are the ones most affected in a bear market because of volatility, but I know or think that in the long term will outperform the market if everything is done right and the company continues being good with fundamentals. That is why I believe it is not worth selling any position right now during downturns. If you have cash available, I would invest in your highest conviction stocks or those stocks you have been looking to add more or start new positions. Please do not panic sell right now because you might regret in the future, just like people that sold Tesla in March 2020 when it dropped 52%. And I mentioned Tesla because I know it is most of your favorite stocks, but that same thing happened with people that sold Square or Apple stock and way more stocks on March 2020. I say this because we have seen that fundamentals have not changed and people are still expecting companies to perform the same thing they were expecting before this downturn. So you have to take into consideration that this is healthy for the market, and obviously I know it is really hard, but it is important as long-term investors to be patient and give it time for it to recover if you are investing in good companies, fundamentally speaking. Thank you everyone for watching. Hope you enjoyed the video. Please subscribe and smash that like button since it really helps the channel out with the algorithm. Remember about the completely free Discord group chat, which is for that is down in the description below. Thank you and see you next time.